We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button, tell me you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index, and I made a video yesterday. If it's your first time coming across the channel, I encourage you to watch this information because I'm going to talk about some pivotal levels moving forward and how the SPY has been reacting in the overall markets. If you watched it yesterday, I do encourage you to revise it, take notes, and be aware of everything because everything I break down could prepare you and set you up for the next few days and weeks. We also now have a SPY bot that pops up when things are bearish and bullish, sending it straight to the Discord. As you see it pop up today, it sent out the notification of bearishness since 11:55 a.m. and that's how the rest of the chart for the SPY reacted. And we've been under a bear indicator on the S&P 500 index since way up here at around $4,562 since yesterday, guys. And you can now gain access to it as well. The link to the 42 vision indicators and the SPY bot is down below in the description. But before we jump into everything in the video and everything I break down, because it's going to set you up and prepare you for the next several weeks and days on what key levels to watch and what's going on with the overall markets, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And if you want to get on early with us, every single morning we strive for opportunities like these. Check out the link down below in the description to the Discord. We look forward to having you join us. And we're going to jump into everything here within the video and break it all down so you guys know the key levels I'm watching, not financial advice, and it's all my humble and honest opinion based off the charts, 42 vision, and the bull and bear indicators, and what I'm going to be looking for this to finally find a bottom or at least try to reverse back up, because there's a lot of bull traps that are forming, as well as in the NASDAQ, guys. You can also see these bull traps forming as it jumps up and pulls back down for the last several weeks. Now, with 42 vision, being able to see the extreme weakness, which is white with red borders, and those shifts into strength with the bull and bear indicators to give an extra layer of confirmation, I will be navigating through this market, and there's opportunities forming to the upside, to the downside, and this is not where investing ends. This is where it begins. I always say this, and these are the setups for the next bull run. Pullbacks are not setbacks. They're the setups for the next bull runs. But with clarity in the charts, one can maximize on their timing and the opportunities that are forming, whether the stocks are going up or going down. We're going to jump into the home run of the day, and then we're going to get right into it here with everything going on in the S&P 500 index and the NASDAQ. So the home run of the day was spectacular and beyond expectations. And if you want to get on early with us every single morning, we strive for opportunities like these. Check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the two stocks I mentioned this morning. CYTO, volume did not really pick up. I ignored it. And SVFD gave us a home run opportunity in a matter of minutes, guys. So here we have the chart, and it nearly went up 25% plus at its highest point. We mentioned it in the pre-market as it was consolidating, pulling downwards. Got that bull indicator a few moments before the bell, pulled back, no bear indicator popped up, reversed with strength, and you could just see that full strength there on 42 vision and the highest point of 25% plus. If you want to get on early with us every single morning, we strive for opportunities like these every single day, no matter which direction the S&P 500 index or stocks are going. We will continue to look for these home runs. We look forward to having you join us. Check out the link down below in the description, and let's jump into these charts. So here we are with the S&P 500 index, and things are pulling back for the last 2 weeks. And I talked about it several times before this all started, way back at the beginning of the year, as we were actually kind of consolidating, and then we started to pull back. And on this recovery, I knew it was becoming a bull trap due to the fact that earnings were coming up, and we're seeing it already through a lot of the earnings that are being reported. CEOs are being very honest, okay? This is super important to realize this about the outlooks of their companies, like how they've reported in the past and how things have been. They're coming forward and saying, hey, this is what's going on. this is what it looks like, and this is what we're expecting moving forward. And they're being very honest about the outlooks actually shrinking, or because of inflation, they're feeling some type of pressures or shortages, right? So super important to realize that this is not just one company. This is not just the S&P 500 index. This is everything. NASDAQ, S&P 500 index, the Dow, all together. So it's the overall market. It's not an individual stock. It's not an individual portfolio. Every single investor is going through the same thing if they're holding stocks. I've told many times, everyone in my Discord, this is not a holder's environment, okay? This is a trader's environment. The only way to hold through this is having the stomach and the conviction of the stocks you believe in. And if you got in prices way back here, okay, back in last year, or way back here in 2021 at the beginning, or 2020 pricing, okay, because a lot of stocks have grown since then all the way till now, and you could see it based off the S&P 500 index, and many stocks have followed, right? But if you started investing into certain stocks at the end of last year, some of these stocks slightly went up, and right now they're back to break even or even below those levels. That is just the effect of what's going on in the overall markets and individual stocks, and specifically the tech sector, okay? The NASDAQ is down nearly 10 to 15%, and it's on its way towards a 20% correction. And some people are seeing this go even lower, especially now that headings like this one are coming out stating Netflix reported disappointing subscriber growth, and it's coming out on other articles in different ways, stating Netflix plunges weighs on Disney, media stocks, and the S&P 500 index and NASDAQ are being affected. So right now, Netflix has set the stage to actually create even further fear than just rates, if not fears of more earnings reports and more CEOs coming with disappointing numbers. Now, in this time period, this is just a lot of fear. But after all this fear and these pullbacks, which are not setbacks, I like to call them setups for the next bull run, there's opportunities forming. And even within this volatility, home runs can still be found. That's what we strive for every single day over at the Discord, whether it's penny stocks, growth stocks, whatever's going on with the momentum and news. We try to get in on early and maximize on the opportunities. And with 42 Vision, you have the clarity to see a good trade from a bad trade. And then also with these pullbacks and slight bull traps, as you see them forming, you can get the clarity to see if that bull indicator is going to last for a few days, a few hours. As we put it here on the 30-minute, you can see it that you can maximize on call and put options, right? Within the volatility, you can see that the bull indicators are very weak compared to when the bear indicators are popping up. Same thing for the S&P 500 index and others. Now, there are some days that things turn into a bull trap and you're able to see it if it negates with a bear indicator in just about 2 days. This one lasted for 3 days, okay? 3 trading days. The 10th, the 11th, the 12th, the 13th, it already started to pull back. And since then, the overall market of the NASDAQ has been going downwards. And those bull indicators have been short-lived. So with this clarity, there's just so much opportunities. And this is going to be a trader's market, not just for a few weeks, not just for a month. It could take several months. And we don't know the bottom, but we do have technical setups to look at. And that's what I'm going to share with you guys based off the S&P 500 index. The NASDAQ's a little bit harder because things move a lot faster here. There could be a lot of up and down. And even if it doesn't look like it bottomed, it may have already bottomed and stuff like that. So it's the tech sector. It's a lot harder. And it might go through a lot more pressure. And I'm going to share with you guys why the S&P 500 index tech stocks are also falling very, very fast. I'm going to pull it up, and then we're going to look at the S&P 500 index and the technical areas I'm going to be watching. So let's go ahead and look here at what's really pulling down the tech sector the most, the S&P 500 index, apart from, the rate hikes, the Fed meetings, and all that stuff. And by the way, the Fed meeting is coming up this 25th, guys. this 25th of this week, January 25th, there's going to be a meeting that's going to kind of set the stage on some of the expectations that a lot of investors are looking into and probably thinking of, or it could set the stage to make people rethink some of the thoughts that we're already having moving forward, going towards the first rate hike, which is expected somewhere in mid-March. So the 10-year treasury, guys, this spiked and peaked so far recently on the 18th and kind of settled down, and it's pulling downwards. It's at 1.74 right now based off the chart, but today live action, it is showing, right, 1.771. So it's super important to realize that this is what's creating the big push up, okay? Literally in December, we were at a 1.34 at the lowest point, and it's just been rising and rising. If this just continues to rise, the Nasdaq's going to go lower, the S&P 500 index is going to go lower and keep on getting impacted, because this is forecasting rate hikes and how much pressure those rate hikes can cause. Now, we've rejected 1.86 or 1.87, give or take. If it continues to inflect downwards, it could eventually create some form of a run, like we saw right here on the S&P 500 index for several days. But the moment it spikes back up, even if it pulls down to, let's just say 1.72, 1.68, 1.65, and then it spikes back up towards 1.8, 1.9, or 2.0, which a lot of people are forecasting this to reach or break through, then it's just going to create a bull trap again, pull it up, and then smash it right back down to even newer lows or retest the recent lows that we've seen. So this is why clarity in the charts are going to be so important. And based off the charts here, if I show you guys how the S&P 500 index looks here with 42 vision, it is currently with extreme weakness. And if I pull it out, you could see that sometimes when there's extreme weakness, there tend to be reversals. Some are smaller than others, some are stronger than others. And that's what I'm going to be looking for going into this week. But after the 25th, which is just 2 days into the week, we have to see how the Fed's response reacts to what it's going to make the markets feel. If the markets liked what they hear, then it could start a rally, but it could be a big old bull trap or a recovery of slightly buying the dip now of investors that are going long. And then eventually there could be a larger pullback of those expecting more negative news or rate hikes to be more aggressive than they expected. And also they're going to be tracking the 10-year treasury. If it continues to inflect downwards, it could create some type of bull trap or slight run like I showed you guys here on the S&P 500 index, like this, or more than that. Not guaranteed to be the same, but some type of reversal. But it doesn't have enough to sustain itself. It needs a stronger foundation. It doesn't seem like this is the bottom. And I'm going to share with you guys, again, the technical points I'm going to be watching. But if this goes downwards and all of a sudden spikes back up, that's what's going to create that next level of fear. And it's going to show that this was all a bull trap like few days from now, weeks from now, and so forth. And the pain is going to start all over, and it's going to create what it created here. So with clarity, I'm watching carefully on the 4-hour how the S&P 500 index is reacting. You could see that the bull indicator has not outlasted these two bear indicators, and they have been significant bear indicators. I mean, from 4,700 to 4,500, that's a 5% correction. From way up here at 4,600 down to 4,300, that's about a 5 to 10% correction. Put it all together, that is a total of nearly 10% correction so far. And these are the technical setups I'm going to be watching, and I'm going to show you guys the 1 day as well with the bull and bear indicators. But let's go ahead and zoom out. The first support I'm looking for closer to where we're at right now is 4,200, but that's not the most significant. The most significant to me is way down here at 4,000, guys. 4,050, 4,060. If that gets broken through, the next one would be down here, 3,600, okay? Way down here at the 3,600 mark. That's going to be the level I'm going to be watching, and that would be a huge correction. If I'm honest with you guys, that would be between a 20 to 25% drawback, okay? and pull down. Is it possible? Anything's possible. Am I expecting that far down? Not right now, but that's the worst case scenario I see, because once rate hikes happen, I think a lot of investors will finally say, okay, well, the first rate hike happened. This is what's going on. I think the markets are going to be able to handle it. But they're all pricing it in now, and those are the key levels I'm going to be watching. To the closer level, 4,200, but the main support I care about is 4,000 on the S&P 500 index, and the NASDAQ, it would be all the way down towards this level right here, which is 13,000. That's like the closer one right now, but it could break through that, even go further. It could possibly touch it, bounce off of it, and never break it again, because like I said, the NASDAQ has a mind of its own. It's much more volatile, and it's important to realize that we are in a correction, okay? There is no way to doubt that, and we were setting up for it, and I stated in my videos when I called out the correction from last year, okay? I even pointed it out. I talked about it, and it was way back in 2021 in February all the way towards March, and I pulled up that old video, and I drew out exactly what I thought was happening now, and we're seeing it unravel. So if this bounces back, I still think it's a bull trap. I could be completely wrong, not financial advice, just my opinion alone. I could be completely out of the whole entire picture, not understanding what's going on right now, but those are just my thoughts. I've been through plenty of corrections before, and just because I think that doesn't mean it's right, but I like to be prepared and aware, and the only way I would think that this bull trap, right, if it does bounce back up, is not a bull trap, is if a bull indicator pops up, and it doesn't just pop up in red with green borders. If not, it would pop up like this, okay, with strength, and then we would have to see a consolidation, and maybe that consolidation, instead of coming right back down, would actually bounce right back up, and it would be the setup for the next bull run in the reversal. But until then, I think that any reversal could be a bull trap, especially until we know how the rate hikes are going to look and how the market is going to sit well or uncomfortable with the first rate hike in March. As always, guys, thank you guys so much for watching, and let's make some money.